Hello and welcome. Today is Sunday. It is the 18th day of May 2014. My name is Derek, and let's take a look at silver on two time frames. The daily chart that you're seeing on the screen now, followed off by the yearly chart. It's been a couple weeks since I've done a video. Not much has been going on, so the likelihood is it'll be a decent amount of time before the next one comes up as well. Volatility has been extremely small, 1.45% on Friday's session and 2.40% over the last 100 days going back to December the 23rd. This was the final day of 2013, which means it closed at, I think, 1938 or 1939, so it's down just a couple of pennies for the year. And for the last 3 years, but 3 years and a month now, well, 3 years, it's been in a primary downtrend. It's only $1.14 from its lows within it, so obviously not much momentum right now. Okay. Earlier this year, I was talking about this move as either the start of the next bull market. After all, it takes a while for these bear markets to end, and it can take a while, but at some point it will, which I need to see it come back to this band and break established resistance, or it's a failed move. Well, it didn't come back to the resistance. Failed move, fast move. You find support in here, and there's nothing wrong with piercing below it and then recapturing. That can be a sign of strength as a possible nice up move. Failed move before the fast move, but you can see here this low is pretty significant. This high was over there. A big move is coming one way or the other. Well, therefore, on the break of this key support, there it was. So for this thing to be in a bull market, I need to see after this downtrend, I need to see it flatten out. Well, it's been doing that for about a week or so now. Step one. Step two, establish resistance. This is not established resistance. Established resistance would probably have to be at minimum 20 1/3. And of course, up to this key level here at 20 3/4. You can make a case for an inverted head and shoulders pattern, left shoulder, head, right shoulder. It did break above key resistance in here on Wednesday's session. However, you're making these cases of higher lows, so holding 19 low change, this pattern would still be in play. Breaking below it, though, I would state that this pattern, which of course did break the resistance, it looks like a failure to me. Possible fast move to the downside. Next key level, 1822. We'll look at some other levels when we look at the more longer term charts. So for the bull market, establish some sort of resistance. Once that happens, this band would start to rise. And then you'd want to have it come back to the band, whether it be for a day, a week, 2 weeks, and then break resistance. I can start to state bull market. So that's a move up here, back to the band area, and then when you break resistance in here, you would be expecting this thing to start another leg higher, and most likely a possible bull market for multi-months. So that's pretty much it for this particular chart. Let's now move on to the more longer term chart, which is a yearly chart going back to 1915, and price action, they were down a penny for the year, so it was 1937 the close. Volatility 18 3/4%, the last 38 average, which takes us back to 1968. Well, that's 67.48%. That's quite high, yet we've had not much this year. Of course, the volatility's been low. I've heard on the JSNIP4 channel that they want to mingle with the market, fix it so that it can only have 1% moves per day. I would not be surprised if they did cases to fix it. It's already fixed as it is, but 1% seems pretty tiny. I couldn't see that. Well, if it does, okay, but I don't expect that to come into play. The LBMA has announced that they're not going to do fixings anymore starting in August. I did see articles within that. And it's interesting to see on Forbes articles them talking about manipulation in silver. It's a small step that's needed, but at least I'm seeing that anyway, because it's obvious, of course, a manipulation within this market. So therefore, as far as downside targets below 1822, the significant line here is 14.5 area. That's a 76.4% from the 1933 lows. It's not easy to find these charts that can scan back this far. But what's interesting is if we look at the pattern of higher highs, higher lows, starting with the all-time lows, at least, yeah, we'll say all-time lows. Then you got this, you got all these higher lows. So therefore, the first lower low would have been, you could say there was this one, but it's still technically higher. Then you had a lower low. When you have a bunch of higher highs, and then you finally have a higher low, or a lower low, then now the key thing is, okay, so now we're going to retrace from this level. This is now the key low, not this, and therefore that's the only real lower low within it. Since then, you got this low, you got this low, and right now it's this low in here. So to keep the pattern of higher highs in play right now, 846, that's still a long ways away. And this high is a matching high from this previous one in here. Therefore, when you see this kind of move, well, let's talk about what I was stating before. When you want this to adjust, you need this market to flatten out, get above it, establish resistance, which it did in here, come back to the band, which it did, break the band. It's had one leg higher. One leg, and it's came back to its previous resistance level. Therefore, the market analysis is if you see something like this, the odds of breaking it and breaking it large are pretty decent. But again, you're looking at a yearly chart. It could take 1 to 20 periods for this to come into play, and I don't want to guess how many at this stage because it's almost impossible. Thank you for tuning in and have yourself a great week. Bye-bye.